Welcome back to Alpha Recap, your daily market rundown from stockalpha.ai. The market day was in the books when we recorded this, and we've got a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Good to be back. Markets closed up today, and it felt like a classic risk-on session. Tech-led, but small caps and cyclical areas joined the party. Plenty of headlines pushed things along, not a single macro surprise.
Exactly. To put some numbers on it, the S&P 500 finished the day up about 0.5%, the Nasdaq-100 was up roughly 0.75%, and the Russell 2000, our small-cap proxy, also finished up about 0.75%. That combo tells you growth plus breadth.
Right, and that's important. When the Nasdaq leads but the Russell 2000 keeps pace, it suggests the rally isn't just mega-cap tech pushing indices higher. Smaller, higher beta names were participating, which points to a more durable advance rather than a one-note move.
Listeners, think of it like a band. When the lead singer is joined by the rest of the group, the song has more depth. Today felt like that. But it wasn't just a feel-good day, we got specific headlines that moved sectors.
Yes, three themes really explain the action. First, tech leadership with broader participation. Second, headline-driven idiosyncratic catalysts. Third, macro caution combined with a hopeful Fed framing. We'll walk through each.
Let's start with the tech piece. The Nasdaq-100 outperformed a touch, led by software, some hardware, and platform names that are still riding AI narratives. But it wasn't an isolated tech spike. Communications and related infrastructure names saw support too.
And the big newsy item that helped tech sentiment. Waymo launched a robotaxi service in Miami. That put autonomous mobility back on investor radars and gave Alphabet and its suppliers a lift, along with mapping and AV software plays.
When a development like Waymo's rollout pops up, it becomes less abstract. Investors can point to a real milestone that drives not just the headline stock, but whole ecosystems. You could see suppliers and infrastructure names tick up alongside the obvious winners.
Moving to the second theme, headlines and idiosyncratic catalysts. Utilities jumped on grid modernization and energy storage announcements. That's interesting because utilities typically trade as defensive, but modern grid and storage exposure gives them growth-like stories, and investors paid up for that.
Plus, industrials and real estate got a boost from leasing and development momentum. Names tied to commercial construction, logistics, and supply chain equipment rallied as investors dialed up exposure to potential CapEx tailwinds. That's the cyclicals showing up.
At the same time, energy lagged. Oil and gas prices slipped after reports of an increase in supply, and integrated and exploration names were under pressure. That pullback was commodity-driven, not a wholesale risk-off move.
And consumer staples were a weak spot after Procter & Gamble issued a profit warning. That guidance dented the whole defensive staples group, even though the broader market was moving higher. So headlines cut both ways.
Which brings us to the third theme, macro and the Fed. There weren't any surprise macro prints, but investors kept passing cooling inflation signals versus still resilient labour market data. The takeaway was patience from the Fed, not about to tighten aggressively, but also not rushing into cuts.
So the market's tone was cautious optimism. People priced in the possibility of a soft landing, growth holding while inflation cools gradually. That environment tends to favor equities over bonds and supports cyclicals and growth plays, at least until we see a real policy pivot.
Let's walk through sector rotation in a bit more detail. Tech and communications outperformed modestly. Industrials and materials showed momentum. Real estate rallied on leasing and visible cash flows. And utilities outperformed on storage narratives. Staples and energy were the laggards.
Real estate was interesting. Investors rewarded REITs and developers with clearer rent demand and cash flow visibility, especially in specialized formats or NNN leases. That's a more selective, fundamental-driven move rather than broad speculation.
On crypto and financials, there was renewed chatter about institutional adoption. Crypto-related equities and payments firms with crypto exposure saw interest. Financials were mixed though. Rallies in some names were offset by legal and regulatory overhangs elsewhere.
To be clear for listeners, when we say crypto-related equities did well, we mean exchanges, wallet providers, and payments firms that have exposure to crypto saw inflows. It wasn't a sector-wide surge, but it was noticeable given the headlines.
Now, some notable individual moves. Alphabet got a bump on the Waymo news. Procter & Gamble fell after its profit warning. Utilities broadly advanced on grid and storage initiatives. Energy majors slipped with the commodity pullback, and select industrials and REITs rallied on leasing and capex signals.
Those kinds of moves underline how news flow can reallocate capital quickly within a day. One headline can push an entire sub-industry, especially when it's tied to a secular theme like AI, autonomous vehicles, or energy storage.
Let's talk technicals and internals for a moment. The tape was constructive. The S&P 500's gain alongside stronger Nasdaq performance suggested upside momentum without overheating. Crucially, the Russell 2000 outperformance, again about 0.75%, pointed to expanding breadth.
Breadth indicators showed more advancing issues than decliners, which supports the idea that participation was broadening. Volume was mixed, so keep an eye on that, but the short-term picture was constructive. Resistance sits near recent highs for the big indices, and a break above those with improving breadth would be bullish.
Conversely, watch the 50-day moving averages and key support bands in small caps and cyclical sectors. If those gave way, we could see a quick pivot back to risk-off. Technically, small cap strength is the canary in the coal mine for a sustained cyclical rally.
Looking ahead to the next session, a few things will matter. Fresh earnings and guidance, any Fed speak or inflation metrics, energy headlines about supply, and continued momentum in AI, autonomous vehicles, and crypto narratives.
Earnings remain a big wildcard. A surprise guide up or down from a bellwether name could accelerate rotation patterns, and Fed comments could shift rate expectations, which would have an outsized impact on growth versus value dynamics.
Tactically, we'd say maintain disciplined exposure to top conviction names. Consider using volatility to add to secular winners like AI infrastructure, renewables plus storage, and logistics real estate, and trim positions that are vulnerable to headline risk. Think commodity-sensitive staples with margin pressure.
Risk management matters. This was a selective risk-on day. Investors were picking areas they thought would benefit from growth and capex while staying wary of inflation surprises and policy shifts. That's classic active stock selection territory.
Quick recap before we sign off. Markets closed up, led by tech, but with small caps holding their own. Headlines: Waymo in Miami, utilities storage stories, P&G's warning, and an energy supply report drove much of the rotation. The Fed remained in the background as a cautious but not tightening force.
And the bottom line, cautious optimism. The market appeared to price a soft landing scenario for now, with selective risk-taking and an eye on upcoming earnings, Fed speak, and commodity headlines that could change the mood quickly.
Takeaways for listeners. 1. Breadth mattered today. Tech plus small caps is a healthy signal. 2. Headlines can move sectors fast, so watch where real milestones appear. 3. Keep policy and inflation data on your radar. The Fed is still the backdrop.
That's a wrap from us. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with more color on earnings, Fed chatter, and the moves that matter. Stay curious, stay disciplined, and we'll see you tomorrow.